So $8,000 per Bitcoin. This is the boldest price prediction that I've seen so far, and it's coming from a big name in finance, Scott Minerd, the Chief Investment Officer of Guggenheim Investments, a big institutional investment fund with more than $250 billion in assets. A couple of years back, Mr. Minerd predicted Bitcoin to go to $600,000 in this bull cycle. So what has changed? Is the 8,000 price tag realistic, and how likely is it for us to drop that low? Another prominent analyst, Gareth Soloway, was a guest on the Stansberry Research channel, and he shared his worst case scenario with a slightly higher price target of $12,000, but still way below my target, which I established in my previous technical analysis a couple of episodes ago. So where is the Bitcoin bottom? 19K, 12K, 8,000? I'll put up the charts and I'll give you my reasons why I agree or disagree with those predictions. Let's get started. Hey guys, welcome to Crypto Corner, your daily guide into the cryptoverse. In today's episode, we are doing market analysis on Bitcoin to establish the key price areas to watch in this bear cycle, our most likely bottom levels, and everything in between. So smash the like button and drop a comment below. Share your opinion or any questions that you have. So let's start with Guggenheim's Chief Investment Officer, Scott Minerd, who predicted on Monday that Bitcoin could drop 70% from here, all the way down to $8,000 per coin. Just over a year ago, the same person predicted Bitcoin to reach a whopping $600,000 per coin. He didn't give a specific time frame for this. It was a loose prediction, saying that we do a lot of fundamental research. If you consider the supply of Bitcoin relative, let's say, to the supply of gold in the world, if Bitcoin were to go to those kind of numbers, you will be talking about $400,000 to $600,000 per Bitcoin. That's an indication of what might be a fair value. So what changed that he's become so bearish now? Well, the market turned, so naturally he's dancing to the tune of the market. In a recent interview with CNBC, he said that when you break below $30,000 consistently, $8,000 is the ultimate bottom. So I think we have a lot more room to the downside, especially with the Fed being restrictive and pumping interest rates like never before. This is a point that I would agree with to some extent. He also said that most crypto is junk, but that Bitcoin and Ethereum will survive. Well, here I strongly disagree. There will be plenty of other blockchains that will survive. Not only this, but future bear markets too. It is silly to think that only the two top blockchains have a future, but that's a topic of an entire episode in itself. Now, the CoinDesk have done some of my homework for me, as they published this chart here where they superimposed his statements and the price predictions so that we can actually see how these are lined up. And it quickly becomes obvious that the guy is simply moving on with the trends, nothing more. I mean, we were going upwards from here as we were in a very strong bull cycle. He predicted Bitcoin to go to 400,000. Market continues to go up. The conditions are very bullish. He makes a bold prediction of Bitcoin to go to 600,000. This is very close to our top, right? Now, as the market starts, very briefly after that, the market starts correcting, and as the market is correcting, pretty much as we reached here a bottom of that correction, he's coming up and saying that Bitcoin is going to sink to 15K. This is at the time when Bitcoin is at 30,000. Then we drop a little lower. He comes and he says, no, it's not even 15, it's 10,000 that we're going to go to. Didn't happen. Then he goes quiet for the whole of this bull run. We print a new all-time high. We start correcting. Still doesn't say anything else. But now that the market is down, the market conditions are all bearish. And as we are getting very close to our bottoming range, and in my previous analysis we already saw why I'm calling this bottom range. Of course, I'm not saying we've hit the bottom price, but we are reaching our bottom range. He's now coming up and he says, no, we're going to fall another 70% from here all the way down to 8,000. So just as the market is dropping again to lower support levels, he comes and he makes this very bold statement yet again. It doesn't matter if he's right or wrong. His media profile is growing. He also said that we haven't seen the dominant player in crypto yet, and compared the current situation to the dot-com bubble of the early 2000s, when the majority of the market was wiped out and new players like Amazon and Google emerged and even flourished. Here I don't agree with him either, because Bitcoin is not going anywhere. Whatever happens with new projects that may come and, replace maybe Ethereum or something, Bitcoin, not really. It has its firm position as the king of crypto. I don't think it will be challenged, but I don't think we will find another coin that will take its place. Now let's go into the charts and see, is his figure realistic? 8,000, that means from here where we are currently, we have to drop 70%. And this is how we actually land here on the 8,000 mark. Now, this to me is not a very realistic figure. In fact, if you actually draw Fibonacci levels, perhaps you can argue that we're getting close to his figure. But even so, let's just take a Fibonacci from the recent low to the most recent high. And for us to actually go to that figure, we have to drop, as you can see here, to the 2.618 Fibonacci level, a drop that is very, very rare. I mean, that kind of a drop can occur in altcoins. In Bitcoin, however, this is a drop that we almost never see, this kind of a drop. This is a very, very big drop. To me, what would make sense is to get to that golden Fibonacci pocket ratio at the 1.618 Fibonacci level. This, to me, is a realistic bottom, if we have to talk about that. This is right now at 23,400. So this is still above our 200 weekly moving average. I'm on the weekly here. Our 200 weekly moving average is actually acting as our strongest support. And as of right now, this moving average is sitting at around 21,700, 22,000, around there. Actually, it is 22,000. So, to me, it would make perfect sense that our bottom range for this correction, for this bear market, is going to be around this level here, which is where the 200 daily moving average is sitting, which is also where our golden ratio pocket is sitting as well. So this is one prediction. I personally don't see a reasoning to be going to the 8,000 price level. To me, this is just FUD. And although you should never say never, to me, going to 8,000 is going to be almost impossible at this point. We will have to have a very strong bear market that will continue for another 2 years from now in order for us to drop all the way down to these levels. A quick drop from here is only going to take us to the 200 moving average, weekly moving average. It's not going to break it. For us to break the 200 moving average will mean that for a very long time we have to be going bearish. All hope in Bitcoin has to be left. Everyone has to really feel very pessimistic and really abandon any positive outlook on crypto for us to actually drop all the way down to these levels. So I don't really think that this is a statement that I can take seriously. The same way I did not take seriously his previous statements of 400 and 600,000 per Bitcoin. I know that these levels will be reached one day, but without setting a time frame, it's very easy to just throw a figure like that. I can tell you that Bitcoin will be 1 million one day, but what if that is in 30 or 40 years time? I will be right. But who cares about 30 or 40 years from now? We care about what happens now in the next year, in the next 2 years, maybe in the next 5 years. Even 10 years from now, it's too long of a time frame to be looking ahead, because we really need to focus on how we are growing our money right now, what is the tech that is currently happening and that is currently driving everything, and 5 years is pretty much a decent time frame to work within. 10 years, a little too far. So for the next few years, Bitcoin is still the king. Bitcoin is not going to 8,000. Mark my words. Now let's go into another projection. This is another well-respected analyst who came in an interview with Daniela Cambone on her channel and gave a similar pessimistic projection. To be fair, he did say that his best case scenario is 20k bottom of this cycle, but his worst case scenario is 12,000. How did he come to this figure? I don't really want to play the video for copyright purposes, but I will mimic his analysis here to show you what he did and how he came to that figure. He used fractals. He basically took this drop here that we experienced, from our all-time high all the way down to here, and he projected this drop from our current, from our most recent high and the current drop that we are making to actually estimate how far down we can go. And this way he reached to this level down here, which is just below 13,000, it's 12,760. So to me, this is also a wrong way to actually judge this drop, because we don't have to repeat this kind of a drop. Our first drop doesn't necessarily have to be identical to our second drop. There is no way that you can argue that, this is a fractal that has to repeat. And I actually have a better way to estimate that. And I understand where he's coming from. I do realize that there is a possibility of that happening. And I'm not ruling this out. I am ruling out 8,000. That, for me, that projection is totally wrong. I'm not completely ruling out 12,000. However, to me, this is still not a very likely scenario. Is it possible? Yeah, possibly. Yeah, we can say that it's possible. Is it likely, however? Is it something that, what is the probability? I feel that this is still a very unlikely case scenario. So what's happening here is there is a tool for that, what he did, and I'm going to use that tool. It is another Fibonacci tool. It's called the trend-based Fibonacci extension tool, and I have already modified it. First of all, what I'm going to do is I'm going to go on the logarithmic chart, because when we talk long-term, especially here I'm on the weekly, and especially with crypto, the logarithmic chart is the one that is working for me. It's more precise. It's working better. So let's use this tool and actually superimpose it in pretty much the same fashion as he did. And then we're going to see where is that taking us. So here I'm going to connect the high to the low, and then this is like an ABC correction basically. The A wave, now I'm drawing the B wave, which is connecting here to the most recent high, and this is going to now show me how far down we can drop. And this drop is coming down indeed to that 12,000 level that he's pointing out. However, what I feel is most accurate, and shout out to Alessio, one of the traders that I'm actually following here, he pointed this out to me. So you actually, if you change the parameters of this tool here and you go and set it up to estimate everything according to the logarithmic scale, so I need to check in this box here where is Fibonacci levels based on logarithmic scale, then where is this bottom taking us? As you can see, it's actually taking us to this price level here, this line that I was drawing earlier based on Fibonacci levels as well. But this here is the 23,000 level. So yet again, a confirmation that the 23,000 level appears to be our strongest support right now. And very soon, as we move on for another few weeks, if we don't drop immediately down to this level, as we move on in the future, after a few weeks, this 200 moving average, and this is the simple moving average, would have moved upwards as well, and it will be getting really close to that 23,000 price level. Meaning that really this is establishing right now as our ideal support level for this drop. Our most likely bottom of this cycle is sitting at around the 23,000 level now. Yet again, this is not financial or investment advice. Just because this level is popping up as our most likely bottom level doesn't mean that we have to go there. We could actually get stopped at the 25,000, which is a psychological support level. It's possible that we actually see a lot of buying pressure coming up around the 25k level, or as we reach 24k could be another strong level of support, but definitely 23k is forming up as our strongest support here. And we also have the 20,000 level. This was a level that was a previous top, let's not forget. So it was 19,000 something, around 20,000. So we do have the 20K, which is from a previous market cycle, our top. We did challenge it here, and very briefly we got stopped. So we established, okay, we established slightly lower. We established 19,800 as a support here. So as we drop here to the 23,000, we could actually make a push downwards. Usually that's what we do. We push downwards to see how far down we can go. Well, we have that 19,000 here, 19,800, almost 20,000 level to stop us as well. So we do have two areas of support that we will need to break, and we will need to break with a lot of volume, with a lot of velocity in order to go all the way down to the 12K. So in all fairness, he did say that this is his worst case scenario and that his best case scenario is 20K. And I support his best case scenario. I feel that 23,000 and 20K are very strong areas of support that we will find a lot of buying appetite at these price levels. Most likely, we are going to get stopped at these price levels. So for me, currently as it stands, our bottom is sitting at around 23,000, lowest possible 20K, 19,800, 19,500, even 19,000. I don't really expect us to drop below 19K, and this is why in my previous video I was talking about Bitcoin dropping to 19. Even if it drops below, slightly below 19, something like 18,000, I feel that definitely support is coming there. A lot of buyers' appetite is coming there, and that drop to me will be very brief. I still support this opinion. I haven't changed my opinion on that. I feel that 19,000 and 20,000 is our area of the strongest support, and the 18K or even 19K are levels that will only be tested very briefly, but it will be weeks of candles. I don't really expect us to be sitting at these levels for longer than a few hours or a day or something like that. Definitely on the weekly, these levels will show up as just a wick, and I don't expect us to be having any big candles around these price levels. I expect that the bigger candles, the bodies of the candles, will be sitting around 22, 21,000 lowest, and the 20K and 19K and maybe even 18K will be a performance that we're seeing here, just a wick rather than the full body of the candle. These are my bottom levels. One of our sponsors is PrimeXBT, an award-winning multi-currency trading platform which offers access to various markets, including cryptocurrencies, loads of forex pairs, also commodities and indices, which means you can diversify your risks by having exposure to non-correlated assets. They offer different leverage percentages on the different assets, and in order to provide the highest level of liquidity and instant order execution, PrimeXBT aggregates feed from 12 industry-leading exchanges and feed providers. More importantly, PrimeXBT is the exclusive home to co-vesting, a peer-to-peer copy trading module that features a 5-star rating system and global leaderboard that provides various metrics to take into account when choosing whom to follow. This is an automated trading feature that allows novice traders to leverage the skills of more experienced traders and collect profits in a hands-free, done-for-you type of a system. I have been using this throughout the year already. I like to be able to tap into markets that I personally don't know very well and I don't trade myself, like oil or gold for instance. Another thing I really like about this exchange is the freedom to use it without having to share your ID or other sensitive data. KYC is not obligatory, and they have some of the lowest fees on the market as well. You can also use their co-vesting yield farming service and earn annual yield on your crypto assets, including stable coins. Percentages vary according to the amounts locked, so check them out. I also have a welcome bonus code that is in the description below, so give it a try by using the links in the description below. And right now you can take part in their money-winning contests. They just launched a whole contest marathon with weekly and monthly rewards. You can take part in this even if you've never used the exchange. All entrants work with dummy accounts, which means that there is no risk for you. You are allocated funds to use for these contests, and if you rank high and win win one of these prizes, you actually win real money. So there's nothing to lose, but a lot to win if you do. Give it a try. The link to find out more is in the description below. Alright, well, this wraps up today's episode of Crypto Corner. You are now up to date, and I hope this brought value to you. Please show your support. Leave a like and a comment below, or if you're new to my channel, hit the subscribe button and enable notifications so you never miss an episode. Also, make sure you check out the links in the description below, where you will find links to all crypto services that I use and I recommend to you, including exchanges, hardware wallets, charting tools, and other services that I use to earn interest on my long-term holdings. My ebooks as well. This will help you get a better understanding of crypto and navigate safely in this industry. If you want more valuable crypto content, follow my blog or scan the QR code here and sign for my bi-weekly crypto newsletter. It's free and it's packed with market analysis, news, and other insights to keep you well informed. Thanks for staying until the end, and I will see you in the next episode.